sometimes you just have to say, you've heard my advice. You're going to take a risk, and I can't stop you from taking that risk.
Welcome to Alt Investing Made Easy, where we explore the complex world of alternative assets. I'm Roland, a securities attorney, investment advisor, and your co-host.
And I'm Sarah, an investment advisor and corporate attorney, and your other co-host. We'll guide you through real estate, private equity, and more, making complex topics accessible.
Tune in for insights that empower your financial journey.
Let's make alt investing easy, one episode at a time. Welcome everyone to Alt Investing Made Easy. Today, Roland and I are so pleased to have the opportunity to speak with our friend and colleague, George Lee of FBFK Law, which is the law firm we've just joined. So George, welcome. Genuinely looking forward to hearing more about you and your practice today.
Excited to be here. Thanks for having me.
Yeah, George, it's great to have you here, and we've known each other for a while and have reconnected recently, and wanted to start off by asking about your practice area. We were talking before the episode, and I didn't know this, but you're actually a third-generation attorney, so this was sort of a preordained path for you professionally, but tell us a little bit about your career, your background, and what you're doing now.
You're right. Not only am I the third generation, my family, to be an attorney here in Dallas, but we're all named George Lee. So I'm the third George Lee attorney here in Dallas. My practice, I've been practicing now for longer than I care to admit. I started my practice actually at a large law firm in Houston, a big, now AmLaw 100 firm. And most of my career I have practiced at big law firms. However, in 2008 actually, that I started my own firm called Lee & Stone, focused on the alternative investment management practice. So since that time, I have primarily represented people interested in investments, mostly private equity, hedge funds, real estate, oil and gas, and even some crypto funds, although I still can't say I understand exactly how it works, although I have had to do a very deep dive on whether crypto is a security and whether or not it's regulated by the SEC or the CFTC, and that area is still developing. It's really fascinating. So my practice generally is most of my clients are registered investment advisors, whether they be hedge fund operators, private equity fund operators, even some real estate managers. A lot of real estate managers don't really think about the securities laws and don't really understand that they are subject to the securities laws, even if they're investing in real estate only, unless it's just investing directly in the fee simple real estate. So I represent my clients in connection with fund formation, SEC or state registration, all the state and federal securities laws. And if they get a visit from the securities regulators, be they state or federal, I sit in on the examinations and represent them in responding to any deficiencies or other things that the regulators find.
You know, George, it's such a privilege to get to work with somebody with your experience, but I do have one question. I don't know that we've ever talked about it, which is, were your father and grandfather also involved in sort of the financial side of transactional law, like you've developed your specialty in securities?
Well, my grandfather, who unfortunately I never knew because he died when my father was 13, his practice, as was the in the day, really a general practice. You just took whatever came in the door. He graduated from law school in, I believe, 1915. So things were very different back then.
Yeah.
Probably the largest law firm in Dallas back then was maybe 8 lawyers.
Oh, wow.
And of course, nobody had law firms with more than one office. There weren't even, firms with a Houston a Houston and Dallas office. It was one or the other. In fact, it was really only in the mid 80s that started to happen. And now these big firms have just grown like crazy. So, my father was with a large firm. He went in-house and then rejoined that same firm. His practice was a little different than mine, but it was a transactional practice, project finance. So yeah, my practice really, I started doing just general everything transactional related. I did bankruptcy law for a little bit. I was in-house with an oil field service company, and then I was in-house with a hedge fund. So that's really where I learned the investment management business,
Right.
both from a legal side and an operational side. And then formed my own law firm focused on this area in 2008 after the '08 crash. We were really in the right place at the right time because we knew Dodd-Frank. Congress was working on Dodd-Frank. They passed Dodd-Frank. We were able to get it up to speed on the regulations. In fact, Congress said to the SEC, we want you to start regulating multifamily offices, hedge funds, but not single family offices managing their own wealth. However, they left it up to the SEC to define what is a single family office. And their original proposed definition was terrible. It was the person that made the money and their descendants, not their mother, not their father, not their in-laws, not their brother or sister. So they could only manage money for their immediate family members.
Wow.
We wrote a comment letter to the SEC about that. They actually took some of our suggestions, and as a result, we got a lot of family office clients. So my practice also includes representing investors like family offices and advising them on the terms of their investment and whether or not those terms can be negotiated with the sponsor of the investment.
That's one thing that I think people sometimes fail to realize is even with family offices, there are some exemptions, but there's no friends and family exemption from the investment advisor rule. So once you start getting paid, then you really do need to pay attention to the investment advisor.
Yeah,
regime.
if you're setting up a small investment fund and you're allowing friends and family to invest in that investment fund, you definitely are subject to the securities laws, and you need to talk to an attorney about what you need to be doing.
Yeah. We've talked about family offices a little bit, George, and I think it's a topic I'd love to get more into on this channel because in other parts of the world, family offices are now it's formalized structures that people use or regulations in different countries about, the various special aspects of what you might need for a company or companies that you set up, business entities you set up for family office purposes. But I do think that historically, family offices are just family businesses. And for example, in places like India, where extended families stayed closer together for generations and share wealth and build wealth together culturally, successfully or not, you'd end up sort of having this family office structure in a way, but not formalized through kind of consciously calling that. And so I think it's really good that now this has just become a common part of the ecosystem of wealth management, really, And I don't know how many years it's been, because I don't know when you first started out, were family offices something that people talked about?
No, not at all. In fact, it was really the first time I heard the term family office was when I was in-house with the hedge fund, and we did have family office investors. And I really think family offices have become much more institutionalized recently. You're right. A family office originally was very loosely structured, but now they can become very institutionalized. They have their own in-house investment managers, many more employees than they originally would. Some do their own deals, sponsor their own deals, and others just tag along and invest.
Yeah. No, we talk about this often, don't we, Roland, that this alternative investing or private securities, it's such a vast market actually. And then it's not quantified on a daily basis necessarily. So it's easy, if people aren't working in this space, it's easy to just sort of go about your daily life, not really understanding how much of the economy and how much wealth is being managed or generated in this private space, which is composed of course, so many family offices and other kinds of private organizations. So.
Yeah, and actually just getting back to the current exemption for family offices, it's very broad. You can go back or forward 10 generations. So,
wow.
The Rockefellers, the Roosevelts, they can have family offices with hundreds of investors. Maybe they don't even know each other. Family offices that size obviously have their own issues beyond just investments. And so, my family office clients consult with me, not just on investment issues, but management issues.
Right. It's a lot about governance, isn't it?
It is.
Yeah.
There's probably a lot of overlap with the estate planning function. So.
Oh, absolutely.
Yeah.
No, that's very important.
And tax.
One rule I've heard is that, and this may be out of date actually, but a family office really needs $100 million worth of investable assets to make sense to become a formalized family office. Otherwise, you can get advice outside the family office that may be cheaper than hiring your own employees full time to be managing your investments.
Right. And that's a really interesting thing to talk about actually separately from, we don't have to digress here, but when are you a family office versus just family members who inherited together and therefore are in business together? And this is something we've been talking about with our other colleague in the office, Dan. And that's a topic for another day when we interview him soon. But it is such an interesting thing, isn't it, that people are in business together, families are in business together, whether they want to be or not sometimes, often, especially if there's a big piece of real estate involved. And then, you end up, if you're very successful, maybe you do go into those formal structures to help manage those family relationships, actually. It's not going to make financial sense necessarily.
Right. Well, and also if the family, for example, made their wealth in the oil and gas industry, they may want to diversify their investments into other things. And that's when it really makes sense, is to have someone in-house that can help manage those other assets that the family may not understand as well as they do the oil and gas industry.
Well, George, there was a question that came to my mind, moving on from the family office discussion. You had mentioned that, even people that syndicate or create funds for real estate, with the 2013 changes, a real estate fund was a new thing. And how do you talk with the people that are primarily working in the real estate area about the investment advisor regime?
Right. So, traditionally, real estate managers have not registered as investment advisors. And I think there's good reason for that. The area is fairly gray. However, if you are managing a fund that is investing, for example, in real estate joint ventures with a developer, and the fund doesn't control the developer, then that joint venture is a security. And if the fund invests in the joint venture, that could trigger the Investment Advisors Act.
So that element of control is really important.
It is very important. And there's a lot of SEC guidance on that, but unfortunately, there's not a lot of bright line tests. Of course, the fund itself, when it brings in investors, is offering securities and has to comply with the securities offering laws. If the fund is using a third party to raise money, that person may need to be registered as a broker dealer. So, it's an area that is, I think, a little bit of the Wild West still. And, I think the SEC just doesn't have the enforcement staff to be able to go after everybody. So it at the end of the day, it's possible to fly under the radar. But it's when things go south and your investors start raising issues and the regulators find out about it, that's when you can get in trouble.
Hmm. Roland, did you have a question?
Just a little bit about like playing the audit lottery with the IRS, taking a position,
Right.
Thinking, well, it's saving me a bunch of taxes and I'll never get audited. So,
right.
But it's just like what you.
Yeah. I think the IRS is a little more aggressive and has, at least until recently, has the staff to really monitor things.
Yeah, this is a hard area for us, and we talked about this, what we were going to talk about ahead of time, and how difficult of an area this is for us to advise on this area about, or when people say, well, how can I get paid on helping people raise money for private securities deals? And you just use the term Wild West, and it just means that these rules get broken all the time. There are people out there that are helping raise money for private securities deals that aren't registered as broker dealers, and maybe they aren't even associated persons of the issuer, but still they get paid. And that was one of the things that we wanted to talk about today is, first acknowledging how difficult it is to advise in this area because the rules get broken all the time, but then give people the correct information.
Yeah. So I think the area that's really flies under the radar the most are these country club deals, right? Where, somebody at the country club knows somebody who's raising money for a fund, and the fund wants to pay them to find investors. So they round up a bunch of their friends at the country club, but they don't register as a broker dealer, which they may have to. And that's not only under federal law, it's also under state law, which a lot of lawyers don't look at. They know about the broker dealer laws at the federal level, but Texas has even a more broad definition of who has to register. For example, under the Texas law, a broker dealer is basically any person who, for all or part of their time, engages in selling, offering, or soliciting investors. So for securities investments. So there's a lot of people, and this happens all the time. My buddy does this, why can't I do it? And it's really tough to give advice in this area. And sometimes you just have to say, you've heard my advice. You're going to take a risk, and I can't stop you from taking that risk.
It's been interesting on our channel to talk about why we have all these regulations and securities laws, and you're right, especially I think with commercial real estate and in places where it doesn't seem obviously with a hedge fund, it kind of makes intuitive sense that some regulation could bring stability.
Right.
And, maybe consumers of such investments need a bit of protection, right? Because they're inherently supposed to have these cool new strategies, cutting edge kind of stuff, et cetera. But I do think, I think it's just important to always go back and remind our audience that these regulations that we talk about, including these about who can sell, offer securities, are all about protecting the wider population of investors that are out there. And the reason that we know they need protection is because of history and what's gone really wrong in the past. And sometimes I think just bringing that little reminder into a person kind of puts things in perspective. Not everybody wants to hear perspective, but I know it helps me and people I tend to get along with. Like, if you remember that things were pretty bad in the 20s and then in the 30s, we got some protections, and then look at all the wealth that's been amassed today. Perhaps there's somebody who's already traced that history to what if we didn't have the securities laws, how much more money would have been lost already by average people. So I think it's really interesting to just remember that these regulations, first of all, lawyers don't create them to create work or to be difficult, and the SEC doesn't either. There is...
No. In fact, Congress and state legislatures are the ones that create these regulations. The SEC is just doing what Congress said. Now, I will say the mandate from Congress to the SEC is threefold. One is to protect investors, like you said, but the other two people don't think about. The first is to create efficient markets, which the U.S. leads the world in. I mean,
Absolutely.
The Chinese markets, I think the translation into English is literally buyer beware. So the U.S. has really the most efficient and respected, and that's why investors have confidence. The third leg of their mandate is to facilitate capital formation. And when I tell my clients that, they're amazed because they don't see the SEC doing that. But I think by having these regulations, investors do have more confidence in making investments and creating wealth. There's at the state level, I think they're more interested in protecting vulnerable individuals, somebody who's inherited a lot of money but just not sophisticated. Whereas, a big institution like a Texas Teachers Retirement, for example, they don't need as much protection as individuals do. So there is a difference between federal and state regulation.
Well, Roland, I don't know that George knows this, but we talk about this all the time with our term democratization of capital, right? Which is essentially I think what you mean by capital generation. This is how you create confidence so that people who aren't trained for years and have years of experience as professional investors have an opportunity to go out there and try their hand, step by step, let's say slowly, until you become an accredited investor, and then, increase your net worth, and then you're more, risk proof in a certain sense. So I think it fits in with the themes that, George, you may not know this, but we've talked about this before in our introductory episodes, especially. And it seems unlikely that there's, the strength and size of the American economy today are directly linked to the fact that lots more people here have an access to build their wealth.
Yeah, absolutely. And I think that really points to the importance of getting a good investment advisor, somebody who is registered either with the state or the federal regulations, because they are fiduciaries. Unlike brokers, they have a fiduciary duty to look out for your best interests. And if you're not sophisticated in investing, that's a really good way to start. They can educate you.
Yeah, exactly.
Yeah, the value of that and understanding it's the test for investment advisors is giving advice with respect to securities for compensation. And so, if you imagine that you're able to, become an expert and know, how to construct a portfolio, what to buy for each different allocation area. But gosh, be an expert and to have that knowledge in all the different asset classes, all the different things that are possible to invest in. An investment advisor can be great money, well spent. We've talked to several people, and not only the planning, but portfolio construction and asset allocation. And
absolutely. And one area where I think the regulations need to be adjusted a little bit and are being adjusted is in the area of alternative investments. For example, private equity. Not only do you have to be an accredited investor, but you have to be a qualified client, which is somebody with at least 2.3 million, I think is the threshold now to make those investments. I think the SEC at some point is going to look at making other people qualified clients. For example, if they do have a registered investment advisor looking out for their best interests and telling them, look, you need to have some other diversification than public securities. It may be real estate, it may be hedge funds, private equity, and I think that's probably where the regulations need to and may in the future be more investor friendly.
And just to remind everybody, the qualified client rule is a requirement for any investor in a deal where the advisor is getting paid a percentage of the profits. But it wouldn't include real estate. Isn't that right, George?
No, it could include real estate. For example, if somebody is getting paid a percentage of profits in a fund that invests in real estate, a back-end carried interest, for example, if the real estate is a security, you're right. But again, a lot of real estate deals involve securities that people really don't think about.
Well, it's just a complex area, and
it really is.
Statement that I've told Sarah is joining FBFK has been great for me personally because I finally have somebody that is senior to me that not to call you old, but both of us have been practicing.
You both started practicing in the last century,
as
Roland likes to say, George.
That's right.
But it's great. It's good to have you as a teammate and a resource to talk about these rules.
Yeah, no, it's one of those areas that a lot of people don't wake up in the morning and think, oh, I would like to discuss this complex area of regulation. Yeah. But when it is your chosen path, it's really important to have people to run ideas off of. I mean, lawyers, we're advising, right? We need to understand this is why the hierarchy of experience is so good. Yeah.
And it's nice to have a little niche where I can nerd out and
yeah, we were joking about that before we started filming, George. I was like, anyway, I don't know if you caught my Star Wars references earlier.
I did. You're in the same generation as my younger brother, so he would appreciate those more than I would.
I have to tell you, I worked with a young lady in her 20s a couple of years ago, and I made a joke with, may the force be with you, and she didn't understand it. It was so interesting.
That is funny. Must have been a boomer.
Yeah, it was funny. So, all right. Well, Roland or George, is there anything else you'd like to touch on? Because actually, sometimes we like to, we've had a really fruitful discussion, and so I think we're fine to stop now. But also sometimes it's nice to hear a little bit about, maybe just tell us one other thing that you do that's not related to your law practice. It's just more about, who you are or what keeps you interested outside of the practice of law.
Yeah, well, I really like to travel, and luckily I have a daughter who loves to travel. And she runs marathons in the most interesting places. So, she just did one in Oregon. She's doing one in the south of France.
Cool.
So I love at least watching from afar, but I also like to travel.
Yeah.
I like to fish.
Oh, wow.
So don't get as much time as I would love to get away to Colorado, or like to fly fish. So that's something you can't really do in Dallas.
Yeah. Not in the Trinity River, hey?
No.
You know, I've only seen fly fishing on TV, even though I grew up outdoors a lot, but in North Carolina, where you're mostly in the forest. And I do think that it looks like incredibly relaxing.
It is.
And beautiful.
It's very zen.
Yeah, that's really neat.
I think they stocked some of the rivers around here, like in the Guadalupe maybe, or the...
Yeah, actually, so I think the Guadalupe is one of the few places in Texas that you can fly fish. Boy, unfortunately, now it's not fishable.
Not a great time. Well, in due course, maybe one of the times you come down to Austin, we'll take the initiative to sort you out to get a chance to go fish. I don't know if I would be any help. I could be happily sit next to you and read a book.
I'd be happy to teach you how.
That would be cool. Thank you.
One thing that I think we were going to talk about is the finder rules.
Oh, that's right.
And that's gotten press recently.
It has, and that's another area that I get a lot of inquiry, and we briefly touched on that in the country club situation. But there is a Texas exemption, rarely used, which allows you to, quote unquote, register with the state of Texas as a finder. You don't have to take any exams, but there are certain things you can and cannot do. You can only work with individual accredited investors, but you can take transaction-based compensation. Unfortunately, right now, you can only do deals that are wholly within Texas. So the investors and the issuers both have to be in Texas. The SEC is working on a proposed finder rule, which they proposed during Trump 1, was never passed. But it would also create a federal exemption for finders with a lot of the same guardrails.
Mm-hmm.
The one thing there that people should remember is that you must register individually. You can't register an LLC as a finder.
That's
and then,
right.
At least the way it is now, you really can only make the introduction. You can't get involved in negotiating the terms, or even really, as I understand it, informing somebody of what the terms of the deal are. All I can say is, George, please meet Sarah. I think you guys, should meet.
Yeah, I think that's true under the current state of the federal law. However, I think there are some things around that you can do under the Texas finders exemption, and I think you will be able to do if the SEC passes its finder exemption. So keep a lookout for that.
That'll be something to follow up on. So.
Yeah, we'll do our next episode. When they adopt that, we'll get you to come on and explain that, George.
Be happy to do that.
That'd be great.
Well, I guess that seems like a good place for us to wrap up. What do you think, Sarah?
Yeah, I think so. So, shall I close?
Yeah.
Well,
thanks,
this has
everyone.
been fun.
No, sorry. It's been so great, George. And I just look at this always as a just the beginning, and we'll do the next one in due course,
Sounds great.
Yeah.
Glad to do it.
Great. Thanks, everyone, for joining us today for this episode of Alt Investing Made Easy. If you like this episode, please like and subscribe to our channel.
And remember, everyone, take aim with your alternative investing strategies.
See you next time.